Good morning, traders. This is Brad Matheny. Today is the 25th of October, Friday. We made it to Friday, and we are looking at a rally phase in the markets today on the 25th in a carryover trend. We are in bullish trending, explosive price action, and warning, meaning that we've got a short-term rollover in price. We are still in bullish daily bias and bullish weekly bias as of yesterday. Remember, we're looking at yesterday's activity and looking at the pattern today and the trend mode, which is the carryover trend. So we're looking at, again, a bit of a rally phase near. Now, I had marked this day, meaning that as we moved into this area on my expected data, that we would be possibly topping into this area. Now, I still do believe, call me right or wrong, it's just my own personal belief that the markets have the ability to try to target this 592 to 594, 595 area. That would mean that we could come up another maybe 2.5% up into this area, up into 593, 594. That'd be about 2.5%. I still believe that is possible headed into the elections. I mean, if you take a look at the economic data, other than housing being very flat right now, and the consumer stalling right now, which is very common into an election. Remember, an election is broad uncertainty, not only just for the entire U.S., but for many neighboring and foreign nations. A major U.S. election is um, is a big thing. Many of you, I'm sure, have been overseas. I have. And even though they may or may not like our policies or our president or our culture, wherever you go, the reality is the U.S. economy is the primary driver of global economic growth. If the U.S. economy is growing, then typically the rest of the world in some way, shape, or form is growing as well. And we are the leading economy on the planet in terms of growth and stability. Now, we've talked a long term about, what to expect in 2025 and 2026. If you follow my research going all the way out to 2034, I have a pretty good idea of what I think will happen. And remember, a lot of this is what I believe will happen based on my research, based on my understanding of the markets, based on how cash flow is going to work. And cash flow is very, very important. If you don't understand cash flow functions, you'll probably never figure out the markets. But anyway, long and short of it is where we're at right now is we're in the midst of Q3 earnings. We're in the middle of Q4. We've got Christmas and Thanksgiving coming up right around the corner, literally. And we normally have a Santa rally, a moderate Q4 leading into Q1 rally that carries the markets into some sort of stupendous end of the year. I believe once we get past this election, maybe a week or so past this election, a week to 10 days past the election, I believe things are going to settle into a moderate melt up into the rest of the year. I believe the Santa rally is going to settle in. I believe, I don't know what housing is going to do. I really think housing is going to continue to stagnate until we get some clarity regarding policies and plans into early next year, what the Fed's going to do. I believe the Fed's going to try to keep rates fairly low into early next year, maybe having to readdress rate issues and inflation issues mid next year, maybe late 2025. But I believe we have a potential chance to see this, 592 to 595 area before we get into the election. Now, what that would mean is that we would see a pretty strong potential for a rally. This could be on earnings. This could be, and remember, we're still in the middle of earnings. Okay. We still got earnings going all the way out to middle of November and then some. So we've got a lot of data still yet to go. And we've got a lot of upward pricing pressure still moving into the end of this year. Tesla just came out with big numbers. Yeah, there will be missing or misses regarding earnings and Q4 expectations. But I think once the pressure and the uncertainty of the election goes away, I think we're going to move into a very solid melt up type of trend. So what we're at today in our rally phase, go back over here. In our rally phase today, even though I still expect we might get a 2.5% rally, I mean, we're really talking about hopefully a move up into the, 584, 585 area, kind of in this area. And then the next day, maybe we'll get a little bit, that's Monday, of a move up into 592. And then the next day up here, the peak on Tuesday, Wednesday, will be maybe up into this 594, 595 area. So, look at it as, basically, if we were to look at it as about 3/4 point moves. So think of it as half to 3/4 point moves over the next couple of days, inching our way higher up into the 592, 595 area. I believe that is very likely. You just a little slow melt up until we get to the 3 or 4 days before the election and we roll over into a low, which will probably retest these areas or this area here. Get rid of that. So either retesting this 575 to 582 area. And like I said, we're getting closer to that hedge moment. So as we climb up this potential wall of worry, this little weird little climbing mode here up, I want you to remember to prepare to hedge. Now, remember, as I told you guys, this week was going to be difficult. You should have already been to 80, 85% cash. This is a measure of protection. The purpose behind moving into cash was to protect your capital against volatility and flash crash type events. Now I think we're going to climb this little wall of worry, this little upward channeling system up into the 592 to 595 area, then roll downward sharply 2, 3, 4 days before the election, probably stall and base right around the election, and then try to melt back out of it to the upside after the election. And again, putting us near, the 10th or call it the 12th or 13th of November, I think we're going to be looking at a pretty solid, moderate melt up. Okay, so let's go ahead and take a look at the QQQ. Remember, I'm giving you my opinions based on my beliefs, my technology. You don't have to listen to me. You can go find other people. I'm just doing my best to try to help as many people as I can. As I've stated many times, if you like what I do, fantastic. If you don't, no worries. Go find somebody else. So we are moving into this sideways rotation. Remember, I warned that, this week would become very volatile. There are literally, thousands of traders right now who have already moved into protection ahead of this election and are waiting for the election day to make a decision on what to do. So there will be a ton of money coming back into the market after the election and positioning for, let's call it the new opportunities that are coming from a new president, new policies, and potentially new engagement in January. So we're looking at, again, a moderate rollover here. Probably could see the Qs run up to the 500, 502, maybe 504 area. I think technology, is let's put it this way. Technology is going to be, in my opinion, the next big driver of growth. I don't know, how I can say it any other way. Technology will lead what I call the bot-com bubble into 2030, 2029, 2030, and beyond. So remember, but we're talking about a real I don't want to say global, but let's call it a full spectrum um, growth bubble. So remember, we're talking hardware, we're talking robotics, we're talking AI, we're talking software. We're talking a really, a transition from, you know, 18th, 19th century mechanical processes into true, potentially 21st century, robotics and AI and software. Think of the difference between, you know, Animal House, the movie, and I Robot, the movie. That's the difference we're talking about. We're really talking about, the difference between, you know, mechanical vacuum processes to AI and robotic processes here probably over the next 25 years. And that's where I think we're going to see a lot of growth. Yes, it's going to shift society. Yes, there's going to be some bumps along the way, but the reality is, the financial markets are the financial markets. So when you talk about societal shifts, you talk about, housing shifts, you talk about any other external factors. So really, when you get to societal and really economic, well, ignore economic, you get to schooling, family issues, relationship issues. Those are all things that we have to deal with as individuals. The markets try to predict in future value of sectors, of companies, manufacturing, raw material, distribution, retail, what have you. And like I said, we're going to be going through a nice little bubble phase here. But I really believe the next phase is going to be what I call the .com bubble, which is going to be, leading a transition away from, call it 1970s, 1980s style electronics into, uh, 2100, 2150 style electronics, really moving us into a robotic assisted economy kind of a scenario. So once we transition through this, which is going to be, a couple of weeks worth of real rolling, I think we move into a pretty solid melt up. So if I were to argue this over here, I would say that once we get past this rolling market and we get into some kind of a basing phase here, we're probably going to roll upward into the inauguration, possibly being at new all-time highs right before the inauguration, and really moving through a big, broad excess phase peak, flagging all the way up, and then breaking out of these highs wherever they happen to be. In this case, it'll be down in this area, but understand this is a big, broad excess phase peak pattern moving into flagging. What could derail this would be, chaos in the streets after the election. If one side or the other doesn't like what's going on or feels cheated or starts rioting in a mostly peaceful manner in the streets like we saw a couple years ago and starts burning and pillaging and who knows what else, then you know what? We're going to have a bit of chaos, and we need to be aware of that. But if everything goes smoothly, like it should, and we don't get these crazy people out in the streets again, like we saw about 4 or 5 years ago, then we're going to end up seeing a fairly solid melt up out of this. I think that's my personal opinion. So be aware that craziness in the streets could derail things, could cause more of a rotational kind of a, if you think about it like this, could cause more of a rotational type of a price move, just really trying to get out of its own way. And this is fairly common. And we'll look at some extended trends. As I mentioned to you earlier, we've got this. In fact, maybe I can do it over here real quick. We've got this big extended move. So this is the chart that I did on the 369 video. I'll come over here to QQQ. I'll come over here to daily, auto scale. So you can see again, and I'm not trying to pick anything here, but we're going to look at the most recent peak up here. coming back down and into flagging. So we have a very broad flag here. We don't have any real breakdown yet. A breakdown of this level here would indicate that we are going to come down, find some new level, consolidate, and then eventually move to the downside. Okay. But we don't have that yet. Now, at the same point in time, we have, and I'm going to draw it here, we have this mode. Let me check it out. Hold on. Did this wrong, I think. Nope, I did it right. So we have the low coming back up into flagging. Draw this in red for you guys. Then we have the, go away. We have the breakout into consolidation. And then eventually we should rally up to a new high if we get that last phase breakout. So we are, again, in the midst of a very interesting type of setup on the Qs where we have this low as a breakdown level to establish a new continuation of a downtrend. We have this high as a breakaway level to establish a new rally phase. We are in the midst of a broader term. Really, I can draw this from way back over here in blue. We're in the midst of a broad excess phase peak pattern in blue, looking at a flagging pattern, looking for that breakaway, trying to set up the phase 3 and phase 4 setup down here. Potentially, that would be a breakdown of this 425 level of the NASDAQ, the QQQ, or we are in an intermediate inverted excess phase peak pattern already into phase 3 and phase 4, looking for a breakaway to the upside. Now, failure of this level here would mean that we would move down. So if we fail at this level, we would move down and consolidate back here to the downward. If we succeed at this level, which would again become the breakdown level here of this blue trigger, targeting this area right here. If we succeed and move higher, we're going to get a nice solid rally up out of this, which is what I believe is going to be the case, rallying out of this mode into the post-election rally phase into 2025. And I believe that's where we're going to pretty much head. Now, this, again, is a big, broad pattern. And again, we could identify, literally, we could identify very large patterns. So look over here. Here's a big, beautiful pattern here. You know, you can see it rolling all the way up, coming down into a pullback, flagging out, and we eventually get above this level, rolling through that flagging and continuing. We now get the inverted pattern low into a pullback, into flagging, and again, I'll make this bright red. And I actually love doing this work. I mean, I could probably spend half a year doing these videos for you. We've now broken out of that phase. Okay, we've rallied up into a new high, and now we're establishing flagging. Big, broad, inverted flagging, attempting to either go there or come back down below our flagging level. So hopefully you guys can see this. Excess phase peak patterns at work. That's really what we're looking at. We've got a big, broad, bullish one in green. We've got a big, broad, bearish one in red. We're up here near this consolidation phase. If this plays out again properly through this consolidation, the short term and broad term consolidation phase, then we're going to get a big breakaway to the upside. We're going to get a big move targeting something way up here. And now remember, this consolidation phase should last about as long as the flagging. So if we come over here, measure the flagging, Control CV, come back over here, consolidation. Okay, we're due for a move, guys. At this point, look at this. Come over here, auto scale, drag this back over. You see from where we were here at the top here, we are right at the end of that window. From the flagging formation here until it changes direction, maybe a little longer, maybe a little longer. This is daily. We're looking at a move going into November 1st. So right before the election, it looks like we are going to get into a breakaway phase, either breaking upward or breaking downward from this level. But if you understand the excess phase peak pattern and the fact that we're rolling into these multiple stages here in aligned or conjoined, so to say, then we are looking at a very strong potential for a very big breakaway move to the upside or a moderate pullback back down here to the 438 area. Personally, it makes a lot more sense that we're going to get some sort of a breakaway phase after the election to the upside. Okay, so that was a pretty fun little exercise. I don't want to waste too much more time. Gold. And I'm glad, like I said, really happy I get these comments from you guys. That's my, if you like what I do, that makes me happy. Obviously, if you don't like what I do, like I said, and feel free, move on. This isn't for you. So gold, we're looking at a bottoming pattern today in bullish and explosive trending. We're off $7.08 right now, 27.41. We are getting into this mode here. You can see this buy cycle. This was the big panic selling. Remember, my patterns don't predict news. They don't predict global conflicts. It's not like that. These are characteristics of price. Should nothing get in the way of price, hypothetically news, political events, earnings, wars, whatever, pandemics, if nothing gets in the way of price, then this is pretty much what price should look like. This is pretty much what price should be doing or trying to do theoretically. If something gets in the way and we see an event like a panic event or news or earnings or what have you, the Fed speaks, whatever, we can get these kind of blow away days, meaning it moves against us because something's disrupted price. So now we're looking at this buy here zone. So again, buy here is based on the fact that we're moving into a bottom, then we move into a base rally, momentum rally, blank day, and top, then gap potential. I see these as is ultimately bullish, moving right into the election. And that means that we would be looking at, again, a pretty solid melt up over the next 4, 5, 6 days, maybe up to 28.10, 28.20. And I believe that is very likely, given my cycle patterns and given what's going on with fear in the election. I believe that this move is very, very likely over the next 5, 6 days. Now I've highlighted the 28.20, 28.40 area by October 30th or so. I still believe that's a very likely target, but you can see here we've shifted, and we'll see how gold plays out. Still has a pretty good rally potential, in my opinion. Again, all of this is my opinion. Silver, big broad pullback. You can see I've highlighted the excess phase peak pattern, highlighting that we were going to be breaking down out of this flagging, moving into consolidation. It would make sense, given what we have with gold, that if I get rid of this and this, that we would be looking at consolidation now setting up kind of in this area. And I will try to highlight that in bright purple. And where we're looking at in the consolidation phase here is we've had the breakdown, consolidate around this area. And then again, if my analysis is correct and we get the bottoming mode, then we're going to fail at this point, rally up above this resistance level right here and the flagging peak right here. And we are going to try to get silver back up to 36, 37, $38. So if my cycle patterns are correct and we get a rally mode prior to the election, then we're going to end up breaking away from this mode here and rallying upward. That will be the consolidation level right down here. Looks like it's going to be right around this 33.25, and we should get a fairly solid rally if this consolidation holds and does what I expect, up about, maybe 6%, maybe 7%, somewhere up to around $35, $36. So I'm going to call it 35.75, maybe $36 up in that area, about 7.5%. So again, pretty solid. You can see how the excess phase peak pattern plays out. What we would be looking for over here, guys, is true consolidation. We need to build a consolidation pattern. And remember, that consolidation pattern typically is going to last about as long as flagging lasted. So you can measure flagging and you can come back over here and measure consolidation. And if you take a look at consolidation, this is an hourly chart. We would go into basically the end of the day today, basing, bottoming, maybe rolling a bit higher, and that would be the end of our consolidation. So Monday, Tuesday, Wednesday of next week, or Sunday, Monday, Tuesday, Wednesday should potentially generate a good solid breakout. We will see. It's either going to go up or it's going to go down. My bet is it's going to go up right now. And lastly, Bitcoin still in that consolidation range. We'll go to daily. Look at how this is playing out. Quite nice, actually. So drag, drag, drag. And look at how this is playing out compared to my drawings. Very, very cool, actually. I highlighted these ranges, told you it was going to consolidate. I drew these little green and blue levels rolling through here. Look, pulled down just like my green level, pulled up just like my green and blue level. Going to be peaking out over here, possibly pulling back down. We still have this consolidation phase here. We're moving into kind of a flagging formation here. I mean, I'll be honest with you, I can see Bitcoin moving into this type of a channel over the next, call it 8-10 days. I know that Bitcoin wants to rally. I know that it wants to get out of this phase, but it's just trapped right here. I believe it's just trapped in this mode prior to the election. So we just need to be patient. I wouldn't try to get overly aggressive with this. You're going to get some churning. It's going to tighten out. It makes sense to me that it would flag out in this area, or maybe, I'll leave that, but maybe it could flag out a little higher up into this area prior to the breakout post-election. That's right into the election time frame right here. So, we could flag into this type of a channel over the next 10, 12 days, 15 days before we get a breakout. But again, we are in this consolidation phase. If we do get the extended move up, we're going to break out to above 72,000, 75,000. Very unlikely, in my opinion, we're going to break down unless we get some real, social unrest, rioting in the streets. Remember those mostly peaceful riots where they burned cities and created billions of dollars worth of damage? We don't want that. We don't want that at all right now. We want to see some peaceful level of transfer. We don't want people rioting in the streets. Okay, I'm going to leave you there. We'll see how it plays out. Remember, the markets are trying to predict future price expectations, future earnings. So they're really trying to predict, 6, 7, 8 months out, assuming we get capital function and financial function properly. So remember, at this point, this market is trying to predict what June, July, August, September of 2025 is going to look like. And that's what you kind of remember. What do you think June, July, August, September, or the end of next year is going to look like? And that's what the markets are going to try to price in over the next 5, 6 months. Okay, guys, talk to you later. I'm going to go back over here at SPY and resize a little bit. Let's hopefully get a nice little rally today. Looks like, look, we're up 0.31 already percent. Pretty good move. Okay, talk to you later, guys. Bye.